Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host with today's trading journey. The first thing on the board today is for COVID-19. We have more than 2.6 million infections globally, more than 180,000 deaths, but we are also seeing more than 700,000 people recover. Now, we have heard some news along the wire that some states in America are going and letting go of social distancing rules and lockdown laws and all that sort of thing, much against advisory. And of course, President Trump has sort of advised against it, even though he's also saying to restart the economy. So a little bit of confusing side there from the president, but we'll have to see what sort of happens. This has kind of resulted in a number of protests. I wouldn't at all be surprised if I saw a riot here and there from somewhere in the US at the moment, because it is all just a little bit extreme. Now, the next thing to sort of have a look at, I'm sort of relating today about oil and China. Now, China is in a situation where they are seriously at risk of having deflation start to occur. They have got reduced spending going on from their consumers. The stimulus package that they're giving isn't as high as what the rest of the world is, but they have their own reasons for doing that. We are seeing the idea that crude oil could seriously impact the production of a lot of chemicals. China is the largest importer of oil in the world, period. So when we sort of consider how much oil that country actually uses, and they don't produce nearly as much, it can lead into some pretty big problems, especially when we look at it from the manufacturing perspective. Oil is used in a lot of different products, petrochemicals, obviously fuel, and a variety of other plastics and things along down the track. So we need to keep an eye on what's happening with that element of the petrol side in China, because it's going to affect the manufacturing. We might actually start to see a deflationary response ripple throughout the world, purely because China is basically 1/3 of global growth when it comes to the rest of the world's economy. So that means then that if we see 1/3 of that global growth drop off, the manufacturing drop off, then we are likely to see a ripple that will have deflation written all over it go through the rest of the planet's economies as well. So definitely something to keep your eyes on as to what might happen in the near-term future. The next thing to sort of look at today is all about storage. Now, I'm not just talking about storage from oil, which they are forecasting to see that we're going to have tank topping moments. Which, when I say tank topping, I mean literally in the big barrel that you can see on the screen right now, that you have at the top of that tank, oil is to the brim. They can't physically fit any more in it. The expectation is right now that much of the world is going to be at that point by the end of May, possibly the end of June. So either way, that's not a good signal for oil refineries, and definitely not for oil producers. We're already starting to see some oil producers shut down smaller oil rigs where they can, but the bigger ones are going to have a much harder time with doing that. The other side of storage is also about shipping containers. And when I'm talking about shipping containers, I'm meaning the goods that are actually inside them. It might be fridges and microwaves and white goods, but it could also be electronics. It can be a variety of different things. Think of anything that is shipped around the world. It usually comes in a shipping container. Now, we've already seen a reduction in the amount of trade that's going on across the globe. Obviously, with borders locked down, it makes it much harder. But at this point in time, it's looking like more than 15% of goods are already being held in storage because they just can't put them on a boat and take them anywhere at the moment. That number is set to double. They're expecting 30% in the coming weeks, possibly months, and that is obviously going to be a problem. Why is it going to be a problem though? Well, it's not necessarily always going to be a problem for you and I, but it might certainly be a problem for the big companies out there who are trying to ship those goods. So that might affect stock prices dramatically, and it could also affect the earnings reports that are about to come into. We are coming into earnings season after all, and I do expect to start seeing some declines across the board when it comes to organizations and their stock prices. So something to actually have a go at. You might get some good trades out of it down the track. Now, the other part about storage that I sort of wanted to put, I just want to put it in a little bit more perspective when it comes to oil. On the chart that you can see now, or the screen, the picture or image I've got here, it shows the little dots as shipping containers or oil ships in the coast or off the coast of California. So this is seriously how bad the oil situation is. They are running out of oil on land, that they are putting oil on boats in the middle of the ocean to just sit there. Nothing more than to sit there. The boats aren't running, they're not turned on, they're probably unmanned or very skeleton crew at the minimum. And they have got oil just sitting there waiting for when they can actually bring it back to shore. So we're already seeing drastic measures being put in place. And this sort of stuff did happen in the last sort of oil price war that we had, where we saw prices drop very low, but it was nowhere near as low as what it has. Certainly never went negative. And we were still seeing that sort of US versus Saudi at the time. This time it's a little bit different. So definitely something to consider for some trading opportunities in the future when we start seeing these ships bring their oil back on shore. The next thing to sort of have a look at today, considering unemployment claims later tonight, is what has actually been the spread of US unemployment. Now you can see on the chart that I've got here in front of you that the largest ones of job losses have come from accommodation and food services, with the smallest being in the educational services and other random or variable sort of industries as well. It seems to be that most of the time you are getting stuff in areas that tend to be more blue collar, but now we're starting to see layoffs in the white collar area. And tonight, this chart is actually a forecast for what they are expecting in terms of job losses again today. So it is going to be interesting to see what the claims are. This chart obviously comes from Oxford Economics and Bloomberg. And so if they are forecasting for, at this point, more than 7 million people, it could be quite an interesting event for the US unemployment, and certainly will make it much more interesting next week when we have NFP. Now, the next chart that I'm going to show you is just to sort of show a little bit further on what's going on with US jobs. This chart here shows the data on jobs and actual job creation side of things. So this is looking at all the job listings and postings available. And they've seen a reduction via very large numbers across the board, across all industries. And so this is definitely something to consider. Not only are we having people's jobs, livelihoods getting cut off because companies simply can't afford it, people are definitely not hiring either. So certainly something to consider. Now for the news ahead tonight, we do have two specific things that I'm looking at. We have a variety of different Eurozone-based Purchasing Managers Index news coming out that is scheduled to delay between each country. We're looking at quite a few, so check them out if you're interested. The other one to have a look for is US unemployment claims. Now, naturally, this has been a really big contender every Thursday night. And remember, we had the first week right after the last NFP report, we had 3.28 million unemployed, then 6.6, then 6.6, and 5.25 the last week. So this week, it's going to be interesting to see whether we go up or down, but regardless, I'm feeling like we're probably going to be in the million mark again, which is just unprecedented, never been seen before in terms of job layoffs in one flash run. So either way, hopefully you've got some good information out of today and you might be able to have a think about some trades coming up for yourself. If you have any questions or you want to get in contact with me, feel free to shoot me an email at talktoal@acy.com. And of course, to get more great content from me and ACY Securities, feel free to like and subscribe to this now. Have a great trading day ahead.